Hi, good morning, Jaiswal.
Hello, sir. Good morning.
Yeah, is my screen visible?
Yes, sir. I can say.
All right. Okay. So in the last session, like after the asset configurations, like we had gone through the transactions. Okay. So acquisitions, retirement, transfer, and depreciation posting. Okay, this is the main type of transactions we had gone through. There, like it was first with acquisition. Okay. So how we make or book some asset into our book of accounts. So asset acquisition with vendor and without vendor also we have seen. Okay. Then there we have seen a new posting key 70 for debiting the assets and a transaction type. Okay. So before the asset transaction, we had executed the balance carry forward, so that system will come to know the exact year specifications and all. Yeah. So for the balance carry forward, already we have activated the chart of account for balance carry forward, but no return earnings account we have specified. Okay. So we have to create a balance sheet account, then we have to assign the GL account in the same OB53. So before with the chart of account settings, we have activated the functionality along with the chart of account, yeah, the return earnings account for the balance carry forward. Okay, so the functionality we have activated so that we can create the P&L GL accounts. Now, for the transfer of the balances to the next year, maybe the balance carry forward, we have to specify the account. So we have to create one balance sheet account first. Then to assign at the same where we have added the account type, yeah, return earnings account type, OB53. Then we can execute the balance carry forward. So even though there is no balance to be carried forward to the next year, but still we have to perform this so that system will update the year specifications with like the legacy data transfer date. We have seen how the system will take the dates and all. Okay, it will be activated even though there is no balance. Yeah. So after balance carry forward, we have to go for the transactions. See, you can try without any balance carry forward, the balance as a transactions. Okay, so if you try like this, system will initiate you to do the balance carry forward first. Okay, then only we will be able to do the asset transactions. Okay, so coming to the asset transactions back, like the acquisitions were the first one. Acquisition with vendor and without vendor, both the cases we have seen how the system will update all the asset accounts and the values. Yeah. Then the asset retirements. Okay. Asset retirement is nothing but we remove the value of particular asset from the books. Like transfer is a type of retirement. Okay. The value will still be there with a different asset. Yeah. And asset retirement with revenue and without revenue, another type of retirements. First one, like we can make it as a sale, so it can be considered as a revenue asset retirement with revenue. Okay, so there we have seen like the asset can be sold with a value higher than the asset value or lesser than the asset value. Okay, so for both the cases, like we have seen system will identify the different amount. Okay, just a moment. Yeah. So the asset sale. So it depends on the asset value we make the sale. Say for example, an asset we made the sale for 1200 rupees, which is having an asset value of 1000 rupees. So the difference amount 200 will be considered as profit on asset sale. At the same time, like if there is an asset, we make the sale for 1000 rupees and the asset value being 1200, then the 200 rupees can be considered as the loss on asset sale. So whatever it is, even though we have the profit on asset sale or loss on asset sale, still we will be having a revenue. So we consider the asset sale is a retirement with revenue. Okay, but at the same time, if you do the scrapping, asset scrapping, so for the asset scrapping, like there will not be any revenue for us. Yeah, the amount we transfer from the asset will be considered as some expenses. So we can consider that amount as loss with scrapping, loss on scrapping of the asset. So both the cases, these are all type of retirements only. The value will be moved or like removed from a particular asset. Yeah. So the retirement, I mean, with revenue, without revenue, sale or scrapping, even the transfer also can be considered as a retirement. In the Asset Explorer tool, we have got the total idea about the balances, the transactions, the depreciation planned amount, okay, and even the master data. Okay, so type of reports and everything can be viewed by the tool Asset Explorer AW01N. In the AUC settlement, we have discussed about the concept of asset under construction. Okay, so we have the concept of under construction asset. Yeah, so any asset which is in the construction phase can be considered as an under construction asset, and later we have to transfer the value to a useful life once the construction phase has been completed. Yeah, so once like we are ready to use the asset, then the value that we have invested for the under construction asset can be settled or can be transferred to the useful life or useful asset, so that the depreciation can be started. Under construction phase, we will not be calculating or considering any depreciation, but the useful life asset, we do the calculations of the what you can say depreciation and all. So whatever it is, we have to create separate assets to map both the amounts. And there, if you remember in the classes for the under construction asset, we have to create the or activate the line item settlement for under construction asset. Yeah, and no depreciation keys have been given. So we have created the AUC, okay, and there the number range we have given for the settlement, and one settlement profile we have given. So settlement profile is nothing but their system will have the entire configuration where to settle and what to settle and all. Okay, so this settlement profile AI is a standard key we will be using for the settlement of asset. Yeah, so if you go for settlement profiles, settlement profile AI, it's a standard profile. There you can see like which are the objects we can settle the amount to. From one point to another point, we can settle the amount. So which are the receivers we can specify here. See, these are all the standard receivers or the amount can be settled to. So AI is a standard profile. You can see that the receiver fixed asset will be made as settlement required. Okay, so using this settlement profile, we can settle the value of an asset to another asset. So here, the building under construction itself is an asset. Yeah. So using the settlement profile, yeah. So we made a settlement rule in the settlement rule, we specify what will be the actual receiver. As a category, we have given, okay, the fixed assets can be the receiver, but which fixed asset should be the receiver for a particular under construction asset, we will specify in the settlement rule. Item wise, transaction wise, we can specify which asset should be the receiver for the amounts from under construction asset. So we have added the completed asset as a receiver, and we have executed the settlement so that we have seen that the amount have been transferred from the under construction asset to the completed asset, that is building, and even the depreciation also started. Okay, and depreciation posting also we have seen. So based on our depreciation key, like we have defined a depreciation key with standard keys, so that system will calculate the depreciation as per the useful life of the asset. Okay, the percentage will be calculated based on the useful life of the asset, and for that year-wise or period-wise depreciation planning or planned amount we have gone through. So that amount have been posted, yeah, with AFAB. A number range was required. Document type AF we use for the standard depreciation posting. Number range have been given. Then depreciation posting have been executed in AFAB. There it has to be executed as a background job. Okay, so and we have completed the background job through SM37, so that we have checked and found out that the planned amount of depreciation have been posted. Yeah, the status of the asset plan, I mean depreciation amount, we have been planned first, and after that, after the execution, we have seen the amounts have been posted. Okay, so this is how we made the depreciation posting. Yes. So these are the main points we had gone to for the asset transactions. Like, any more question from this? Okay, so by this, like we have completed all of our FI topics, and controlling also, like the standard configurations and all we had gone through, and whichever the remaining topics with controlling, like we will see. Okay, and before we go for the remaining topics, we will have an overview on like what are the main points we have covered through, I mean, in the controlling area. So for controlling, okay, yes, through the FI topics itself, we had covered some of the standard controlling configuration, being it is S/4HANA in an S/4HANA system. Okay, so we cannot go without the minimum configurations for the controlling. Okay, so some of the configurations we had already gone through. First was like controlling area. So as we have discussed on that day, like controlling area is the standard organizational unit for controlling. We know that the importance of a company code for FI transactions. Yeah, the similar way for the controlling, it will be controlling area. Yeah, so the initial entries will be, I mean, for the controlling will be from the FI transactions. So which means from a company code. So after defining a company code, we have to assign, after defining the controlling area, we have to assign a particular company code or a set of company codes from which the controlling area will get the transactions or the amounts, and also some functionalities like we have activated. Yeah, so for controlling, like we are going to discuss about cost element accounting, then cost center accounting, and after that profit centers and internal orders. Yeah, these are the main points that we are going to cover with controlling. For the cost element, cost center and profit centers, we had already done the configurations and even the transactions also we have seen. So the remaining points we will see, okay, along with the reports and all. Internal orders we have not touched. Okay, we will see. Yeah. So for the controlling area, together with the activations, like we have given a cost and standard hierarchy, which will be considered as the topmost level or top node of all the cost centers. So whichever the cost centers we create under this controlling area or company code, yeah, can be categorized. We can say some subgrouping or something. Whatever it is, the entire set of cost centers, yeah, maybe with different grouping or by directly, will be created under the standard hierarchy, cost center standard hierarchy. So a cost center standard hierarchy we have to specify for controlling area, which will be considered as the topmost level, or we can say all the cost centers that we are going to create will be under the standard hierarchy, cost center standard hierarchy. So along with the creation of controlling area, we have maintained one cost center standard hierarchy as well. RTCC was a cost center hierarchy that we have used. Yeah. And yeah, so simply the controlling area, then the company code has been assigned, and then the cost center also got activated. Anyway, cost element will be and profit center will be automatically active. Yeah, cost center we have added or activated manually. Internal orders still we have not touched. Yeah, so we will come back to this internal orders, the activations and the the accounts and transactions, everything we will see. We'll come back to internal orders. Controlling area, then the number range we have copied from the standard key 0001. Okay, there you have seen the number ranges have been aligned in such a way with elements like COIN or still more keys we can see for managing different controlling transactions, for reposting of costs or reposting of revenues, some assessments. So a lot of controlling number ranges will be there. Yeah, number ranges have to be assigned. So we can simply make a copy of 0001, so that will be enough for us. So we made a copy to the controlling area T01. Version we have activated. 0 will be the actual version. Yeah, that version we have activated from a fiscal year and account. What I can say, exchange rate type. Exchange rate type and all we have discussed in detail at the foreign currency transactions. Yeah, so there version 0 have been activated. Then yeah, so for the version we are going to do a planning. Yeah, we do the planning with a combination of a cost element and a cost center. If you simply say, like, for a particular cost center, what can be the particular cost for a particular time period? Yeah, so for example, as you can see, we can monitor the electricity expense of a particular cost center, cost CC1, let it be administration department or maybe production department. Okay, any type of cost center, we will monitor the electricity expense for like May to July in 2023. So we assume that it can be 5,000. So we may have different reason for making a planning. Okay, we will be having some case study or some historical value, whatever it is. Okay, so we will assume that okay, 5,000 can be the maximum amount for the electricity expense for the time period. Okay, so if it is more than that, means okay, we should know that it will really affect our business or our profit. So making a planning like this, we will monitor with the actual amount. Actual amount will be always maybe higher than the planned amount or like less than the planned amount. It can be different. So we will make a planning, yeah, and we will match with the actual amount. The difference we say variance. Anyway, planning we have to do, cost center planning we have to do. So that time we will see in detail. whatever it is here, the activation of the version we have done. Then it was the activation of ledger group. So we have the concept of ledgers, leading ledgers and non-leading ledgers. However, the leading ledger is a mandatory activation. Yeah, 0L have been considered as the leading ledger. It have to be activated with the version 0 for controlling area. So ledger for controlling version, we have activated version 0 for controlling area RT01 with leading ledger 0L. Yeah. So these are the configurations like we had gone through from the controlling, and also profits and deaths. Okay, profits and deaths we will come back. So here, first we will be having cost element accounting. So for cost element accounting, we have primary cost elements and secondary cost elements. Okay, and what is a primary cost element and what is a secondary cost element? Primary cost element, and we will see secondary cost element. So whichever the GL accounts we have created, which we have given such a value like or activation with a controlling area. So for example, rent or salary we have created with an activation from controlling area, so that it can be assigned with a cost object or controlling object, say cost center. So this type of accounts, yeah, we have created as a primary cost so that we can allocate with some cost centers or controlling objects. So it can be used for the evaluation of the cost at the controlling level. Some accounts like we have not created as cost, primary cost. We have used the non-operating expense or revenue. There was no activation from the controlling area. So even that account we will not be considered as a cost or primary cost. So any account which has been created like this, yeah, we can say it's a primary cost. So like rent we have created or salary we have created, even the material expenses, yeah, maybe consumption accounts, material consumption accounts. This type of accounts we create, yeah, even for some controlling activities. Say for example, like for the costing activities, costing, product costing, we use this type of accounts. Okay, so these accounts we say primary cost element. By the activation itself, we made it as a primary cost. By the cost element category, we made it as primary cost element. Yeah, and together with them, we have created the revenues also. So for example, sales account, yeah, we have made it as a revenue. Still, it's an activation from the controlling area. Cost element category 11, make an account a revenue. Okay, this also will be having the same effect as that of the rent or salary we can use for the controlling like valuations and all. Yeah, that is primary cost element. Coming to the secondary cost element. So what is the use of a secondary cost element? See, before we have done a settlement. AUC settlement we have done. AUC settlement. Okay. So here, those value have been transferred to a different account from one account. The entire value from asset transaction have been transferred to the building. Okay. So such type of transaction, let's say we use the secondary cost elements for some settlements. If it is not an account like this, so there what we have done is from one asset to another asset, we have made the amount in full. Okay. So here, okay, I will get with a different example. Let's go for an assessment. Yeah. So assessment will be the best one to explain this concept of secondary cost element. See, for example, here an electricity expense. Okay. Electricity expense. So think about the costing of this electricity expense. Yeah. Let's say this electricity expense for a particular month have been 1,000 rupees, and which is being paid by cost center 1. Okay, cost center 1. Let it be admin department. So admin department have paid the electricity expense for the month of June or July. Okay, so think about that. The total amount paid by the, cost center 1, maybe the electricity expense paid by cost center 1 should have a share with cost center 2 and 3. So for example, cost center 2 should bear maybe 25% of the total electricity expense. Cost center 3 should have maybe a 30%. So 55. The remaining amount of 45% only should be like paired by the cost center 1. Let's say there is a rule like this. Okay, so for the total electricity expense paid by cost center 1 have to be shared with other cost centers also with a particular ratio. Yeah, with other cost centers with this ratio. Let's say this, we have a rule like this. We can say this is an assessment rule, or even settlements also. We can consider settlement rule, whatever it is. Here, this is the actual posting. Yeah, so this is the actual posting. Actual posting. So actual posting will be always with a primary cost. We know this is a primary cost. Yeah, there the assessment should come. Assessment. Never ever the actual posting will be changed. Whenever we check, like for the month of July, the electricity expense have been paid by cost center 1 only. There is no change. That is the actual posting. Okay, but if we come to the assessment, in the assessment we should say that okay, cost center 1 have been like given a 45%. Yeah, that is 450. Sorry, 250 and 300. This is the assessed amount. So actual amount will be always with the primary cost. Once we make the assessment, we have to execute the assessment. There we have to specify what will be the assessment cost element. We have to specify an assessment cost element. Okay, so let's say assessment for, yeah, assessment for electricity expense. Let this be our assessment cost element. Yeah, assessment cost element is a type of secondary cost element. Okay, so we have to create a secondary cost element which should be an assessment cost element. You know how a particular account will become a cost or a revenue by like different cost element category. So for example, if it is 11, it will be the account we create will be a revenue, and if it is 1, the account will be cost, primary cost. Okay, so the activation starts from here. If it is a primary cost or revenue, there by category we can specify it's a revenue or X cost. The same way, if we make this account as a secondary cost, here the options will be different. See, it's not 1 or 11. These are all the standard what we can say secondary cost element categories. Yeah, see, if here it is a settlement, the category will be 21. Yeah, so 21. If it is assessment, we can say it is 42, or even you can see some internal activity allocations. Yeah, or some overhead rates. So we use different activities, yeah, with settlement cost, secondary cost elements with these categories. This categories makes a particular account as that type of secondary cost element. So here, to receive the assessed value, we have to create a settled assessment cost element with the category 21. So how we have created the other accounts, the same way here also, we have to create one account, but the category should be 42, so that it can be the receiver for some assessed values. We make the assessment of this value, the actual posted, with this rule, so that this will be the receiver assessment cost element. So these are the type of secondary cost elements. Secondary cost elements. For this type of activities, like maybe some assessment or settlements, yeah. So internal activity allocation, some overhead rate activation, sorry, calculations posting. So all these cases, we use the secondary cost element. Direct posting will be always with the actual, the primary cost. So any value beyond that, if we make an assessment or settlement or type of activity allocations and all, we use the secondary cost element. Yeah, we use the concept of activity types for any overhead accounts. Yeah, so we use machine hour, man hour, machine hour. Then type of activity types we use to map the overhead amounts. So for all these cases, we create the accounts 43. Okay, so here secondary cost element. So actual posting will be always with a primary cost. Okay, so this kind of settled values or assessed values and all will be with the secondary cost element. We can see the actual report like this and assess the report like this. Yeah, so these are the type of uses for secondary cost element. Okay, so we have like one assessment cycle to be done. The same topic we have to do. There we will create a secondary cost element, and we will what we can say, use the secondary cost element for the assessment, and we will see the value also. But this is a concept of secondary cost element for the moment. We will come back to the assessment cycle. Then we will do the creations and the what you can say, postings and reports. Secondary cost element. Okay. So primary cost element, like we had already gone through with multiple type of accounts and all. Now this is a secondary cost element. We will come back to this with a different topic with assessment. Okay. Then this is with cost centers account. So for the cost center accounting, we have got the controlling area, RT-1. Okay, the cost center standard hierarchy we have given. There we are going to create all the cost centers. Cost center standard hierarchy. Okay, under this we have created some cost centers also. Yeah. Now KS01 we have used to create a cost center. Define cost centers with KS01. So we use KS01 to create a cost center or even copy. We made the copies of the master data and even the transaction data. Yeah, see all the accounts. It can be a GL account, vendor account, customer account, even the asset account. Okay, so everything we have made the copies. The same way cost centers also can be copied with a reference. So using K01, we create the account from the scratch or from a reference. Yeah. KS02, we can edit the cost center, and KS03, we can make it as in display mode. Display. So cost centers, case 02, if we go, K02, so edit or change cost center. Here we can do the changes. See how many cost centers. Okay, so cost center 1 or 2, if you want to do some changes, yeah, we can go for that. Master data. So here we can do changes. So any change we have to do, we can change here. We can save it. The profit center have been active here, so you have to specify a profit center. Let's go for profit center 1. Save it. So any change, like system permitted change, we can do to the cost center with K02. In K01, we can create a new cost center. K01. We can create a new cost center from the scratch, like we have seen before, or we can go for a cost center from a reference. The copying also will do from here with the same K01. Yeah, so cost center 1 will be copied to cost center 3, and whatever the required changes, we can do the changes here. Yeah, we can save so that you'll get a new cost center 3. So K01 we can use to create a cost center from the scratch or from the reference. 02, it will be in the edit mode. We can do the changes. But if we go for K03, it will be in a display mode. So no changes will be allowed with K03. So for the end users, like we provide the access for K03 only, because they can simply check the values. Okay, they will not be able to create a new cost center or even to do the changes with the existing cost centers. If they want, they can check. See, it will be only in display mode, so no changes will be allowed from here. That is cost center display. Yeah. So cost centers, how to create, do the changes. Yeah. After the creation of cost centers, anyway, we have seen how we can allocate, or we can assign the cost centers with the transactions. Okay, with any GL account which have to be created as a cost. Yeah, we have specified the cost centers. Coming to the next one with the cost centers, that is cost center group. Cost center group. Yeah, see, let's say we have 2 or 3 cost centers, cost center 1, cost center 2, or some kind of cost centers we have. Okay, here we can make a cost center, we can make a cost center group for some requirements, like maybe report generation, yeah, or some cases of assignments also. Yeah, see, let's say we have to take the report of cost center 1, 3, and 5. Okay, so 1, 3, and 5, we have to get the report. So here what we can do is we can create a group. group of cost center 1, 3, and 5. So whenever we want the report for the particular cost centers, we can take the group report. Let's say this is group 1. Group 1 includes cost center 1, 3, and 5. So, like if we make it as like a series, cost center 1 to 5, system will take the report of 2 and 4 also. Yeah. So here we can make a group with randomly selected cost centers, or even like, let's say cost center 1 and 2 we required, 4 we have to ignore, and 5 we need. In this type of scenario also, yeah, 1 to 3 and then 5. We can make a group for like these 4 cost centers. Yeah, for some cases of assignments also we can use. We will see the what you can say, the use of this assignment with a cost center group as well. So here we can take the report of these 4 cost centers only, making it as a group. Somewhere the multiple selections will be available with the assignments or of the group, with the reporting or even the assignments, but somewhere it's not there. I'll show that. If it is like a randomly selected cost centers, okay, the multiple selection will not be available there. So in such cases, we can create a group and we can assign the group. So system will not consider the cost centers which we no need to assign. This is cost center group. Okay, we have to create a group key and we have to assign which are the accounts required. Cost centers required. That's it. Cost center grouping. Yeah. So KSH1 to create cost center group. KSH1, a group key, we have to specify that it be group 1. Yeah. Anyway, controlling here RT01, cost center group 1, enter. Here we can specify the name, cost center group 1. Then under this group 1, which are the cost centers to be updated? Okay, let's go for insert cost centers. Insert cost center, here we can specify as a sequence or individually. Yeah, say here, let's say you have cost centers, I think only 3 cost centers we have, right? Okay, let's see, create one more cost center. Yes, so cost center 4. Let's create a group like 3 we can avoid. Yeah, let's go for cost center 1 to 2, and we can ignore 3, and then we can select cost center 4. Yeah, so if we enter, we can see in the sequence like from 1 to 2. If we go for 1 to 10, system will show all the cost centers from 1 to 10 and the randomly selected cost centers also. So whatever it is, the cost centers that we have to keep in that particular cost center, cost center group, can be specified and simply to save it. Cost center group. Yeah. See, at the reporting time, if you take any cost center reports, like this, you can take the report for a particular cost center as a sequence. Here, I manually picked a randomly selected cost centers or even as a group. So we know which are the cost centers available in this particular group. Cost center 1, 2, and 4. Yeah. So here you can make the selections of cost centers individually, sequentially, or as a multiple selection, or as a group together with the cost element. So cost element also you can make like this. Okay. See, for example, if you want to take the entire report of particular controlling area cost center report for the group 1 only, here we made with 1, 2, and 4. So the transactions based on the selected cost element will be generated. Okay. So, yeah, either you go for cost center 1. System will show the report of the particular cost center 1 only. Yeah, the cost center 1. So these are the transactions we have made. So total 45,000 was there, and these are the values for cost center 1 only. Yeah. So like this way, you make it as a series, multiple selection, or even as a group. Cost center report. Okay. Cost center report is KSP1. Cost center reports. Another type of grouping concept we have, yeah, that is at the cost center hierarchy level. Okay, so that is cost center hierarchy. We already got the standard hierarchy, that is RTCC. This is the main hierarchy or main group. Under this, we can segregate the cost centers with some hierarchy level grouping. Hierarchy level grouping in the sense, see, we have the concept. So normally we use like this. Normally we create profit center equal to one plan. Let's say we have 3 plans in our company. Okay, so plan 1, and plan 2, or plan 3. 3 plans. Yeah. So plans, we make it as, let's say 100, 200, 300 plans. The same way we create the profit centers as well. 100, 200, 300. Yeah. So the cost centers that we'll be creating will be considered under this profit center. Under this profit center means under one profit center, yeah, we'll be having multiple cost centers. Let's say we can consider that cost centers or cost allocation points for that particular plant. So whatever it is, we do the segregations also like this. So for example, we have all the cost for what I can say administration cost. So you will be having administration cost for plan 1, plan 2, or plan 3. Okay, then we will make it as like plan 100, 01, 200, 01, 200, 01. Your administration cost for all these plans. Yeah, this profit cost centers will be assigned to the profit center because plant is not a controlling object. It's an MM object. Okay, but profit centers and cost centers are our controlling objects. So Every cost centers we create will be assigned to a profit center. Okay, so let's say all our administration cost is like this for all the plants. Let's say another expense like what I can say, manufacturing cost, production cost. Yeah, production cost for plant 1B 10002 202 or 200 sorry 302. So if you check like like vertically or horizontally, you can see the similarities. These are all plant 100 expenses, and these are all like administration costs for different plants. So whatever it is, yeah, with a different type of combinations, like you will be having this much of cost centers. So it belongs to plant 100 or plant 200 or whatever it is. This is going to be the total list of cost centers that you are going to create. Total cost centers. Though, so these cost centers, yeah, all these cost centers will be under the standard hierarchy RT01. The entire cost center that we will be creating under the controlling area will be done under this standard hierarchy RTCC. Beyond that, we can create some sub-level hierarchies. Say, for example, all the cost centers we create for the plant 100, let it be a sub-hierarchy 100. This to be 200. This to be 300. So some main hierarchy or standard hierarchy or even some sub-hierarchies is possible. We can segregate the cost centers with some sub-hierarchy levels. See, whenever you create a cost center, so here, system will ask for hierarchy area. Yeah, this hierarchy area, which means that is there any sub-hierarchy or under a sub-hierarchy it has to be created, or any main hierarchy, whatever it is, all these are hierarchies. Yeah, levels or sub-levels to segregate our cost centers. Yeah, so far how we have created is with the standard hierarchy. Yeah, all the cost centers will be here like this. So under the standard hierarchy, we can create some sub hierarchies so that our cost centers can be segregated like this way. So this is a concept of cost center hierarchies. Okay, so the standard hierarchy RTCC we have directly created at the time of controlling area creation, but here you're already using this one, so that's right. Say, you can see here. Yeah, with the main hierarchy of the standard hierarchy, all of our cost centers have been created. So under the standard hierarchy, you can have some sub hierarchies so that your cost centers can be segregated or grouped. Okay, it's not only the cost center hierarchies we can create here, even the cost centers also can be created instantly. See, first we'll create one sub-level hierarchy, one or two sub-levels. Okay, let's say 1 and 2 with one group and 3 and 4 with second group. Yeah, so for that one, just simply create, okay, select, create a lower level group. Okay, let it be group hierarchy or hierarchy 1. Enter. You can see one sub hierarchy have been there. So simply pick and drop so that 1 and 2 under subgroup H1. Create one more, a lower level group. That would be H2, group 2. Yeah, like this way, we can segregate the cost centers with cost center hierarchies. Even the cost centers also can be created. Yeah. So for example, here we want to create a cost center. Go for create a cost center. See? So if you try to create a cost center over here, so whatever the tabs you got with KS01 for creating cost center will be available here also. Yeah. So here you can specify the details so that instantly you can create a cost center. So cost centers and cost center hierarchies. Yeah. So the creation of cost centers, changes and display, cost center grouping and hierarchy, and even the cost center report. Yeah. So the next one with cost centers is cost center planning. Cost center planning. Okay. We have already discussed about the planning of a cost center with a combination of a cost center and cost element. So here, for a particular time period, you can go for a planning. Yeah. Let's say what can be the electricity expense for a particular time period with cost center 1. For this one, the configuration will be from the version activation. Okay. So the planning version have to be activated. So the planning version 0, we have already activated with OKEQ is there. Yeah. And after that, we have to set up the planning setup. Yeah. So in KP06, we are going to do this planning. So first, create all the cost elements and cost centers. Yeah, and go for the planning. I think that we don't have this cost element, electricity expense. Let's check. We don't have. Okay, let's create one electricity expense. Yeah, cost centers we have. Okay, so with the combination of cost centers and cost element, we're going to do a planning setup for a particular time period. Let's say 2023, May to July. Planning setup. Okay, so in KP06, so here version 0 from period May to July, let it be 2 to 3 and 4, April, May, June, July. Okay, 2 to 4. For the fiscal year 2023. Yeah. So here you can see cost center individually or even as a series or as a group. See, here you can see the use of a particular cost center group. Think about here, we are supposed to assign cost centers like not in a series. Say for example, 1, 2, and 4. You have to specify. So here you can see We'll not be having any, multiple selection key. So here the only possible way is to create a group and to assign here if it is not in the sequence. Yeah, we know like if we go for a group, which are the cost center, active. Okay, so whatever it is, as a group or as a like a sequence, yeah, or even individual also, you can specify which are the cost centers you have to assign, or we have to specify for the planning. Even the activity type also planning also we'll do over here. Before I mentioned about this activity type at the time of secondary cost elements, activity types. Okay, so for the costing purposes, we use the activity types. Okay, so how many machine hours we have used, or how many man hours we have used, such kind of activity types. For here, you can ignore that. Come to the cost element. So cost centers and cost element. So cost element will also like as a sequence or as a group, you can specify. So here, let's go for cost center 1 to 3 with a combination of, let's say, cost center, okay, salary to electricity expense. Actually, for this scenario, we have to specify only electricity expense and cost center 1. Only like 1-to-1 combination is enough for us, but we will check the remaining cases also, possibilities also. So here we have given such a combination like cost center 1 to 3 and 0 to 2. So 3 cost centers and 3 cost elements you can see. So that combination, we can see the effect. Yeah. So it doesn't mean like with all the combination, like we have to specify a value, but we can make a combination like this. Just go for form based. This is an entry screen. The overview here, you can specify the values for each combination. So for salary for cost center 1, how much it should be, or electricity expense to cost center 1, how much it should be. Yeah, we can specify. So there's a first combination with cost center 1 with all the cost elements. Let's say here we have some value, maybe 5,000 to be made as a planning. Second one, we don't need to do the planning. You can ignore. This one will go for some amount. So with all the cost elements with cost center 1. So for the same set of cost element with the next cost center, we can go for next combination. Next combination. Okay, we go for next combination, we'll get the same cost elements with cost center 2. There you specify which are the values you have to do the planning like this. Okay, so with the combination of cost centers and cost element, we can specify the planned value. The value can be planned. The actuals will always be different. We have some transactions with salary and all, but still, let's go for a transaction with electricity expense. Let's say FP 50. Let's go for a transaction for testing. Electricity expense. Debit 2,500. Let's go for cost center 1. So there is the actual posting for cost center 1 and electricity expense. So we have a planned value. So we have now an actual value. Okay. So the difference will make the variance. So the cost center report, you can see the T code S underscore ALR 870-136-11. This is the code for cost center report. I'm sorry, the variance report. So we got value planned, and now we have posted the value, that is the actual. Here comes the variance report. For the variance report, we can set up the parameter, like for which area the report have to be generated. You can specify the group or even the values or the multiple selection with cost centers and cost element. So whatever it is, we can specify. If you have to filter out the report, yeah. Otherwise, you can go directly. The system will show the entire report of the plan and the with actual and the variance. So here you can see. In total, yeah. So for the salary, this is the actual posting. Okay. So we have total plan cost of 11,200, and this is the variance by value and by percentage. We go individually, you can see. Okay. Individually with cost center 1, see 5,000 we have planned. So 5,000 is the actual, so there is no variance. Rent, we have a posting of 40,000, no amount we have planned, so you can see. The electricity expense, yeah, actual was 2,500, our planned value is 6,200, so the variance is 3,700 less. Yeah, so with each combination, you can see the report, even the total report also. Cost center planning. So based on this value or the variance value, like we take the decision how it has to be what you can say the bring down. It's not like okay, so we have made an electricity expense planning for the entire 3 months. Okay, it's not like at the end of the July only we check the value. No, periodically we will check, and we will take the measures to bring down the values. So, cost center planning. Any question? Okay, we'll go for a 10 minutes break. Yeah. Is my screen visible?
Yes, sir.
All right. So, cost center planning, okay? So after this cost center planning, I'll go for another type of cost center transactions, that is repostings. See, then what is a reposting? See, we have already gone through some controlling transactions with KSB1. Okay, let's take this one. See, these are the cost center 1 and 2 report for salary. Okay, so here, yeah, so cost center, only cost center 1 and 2 have the report. I mean transactions for all zeros. Okay, so for this cost element salary, you can see the report with cost center 1 like this is, and the cost center 2 like 3,000. So 3 line items are there, and these 3 items are separate transactions. You can see this is transaction document number 1000, and this is document number 1005. So here, just take this transaction. From this transaction, the maximum amount assigned to the salary is 4,000. Okay, let's check. We'll add the cost center. Yeah. Cost center. Yeah. So in this transaction, document number 4,000 rupees is the amount assigned to cost center 1. Okay, so from this transaction line or document line item, we can transfer some amount to another cost center. That's a type of reposting of the amount from one controlling line item. Okay, so reposting in controlling line item, here we can transfer the value from one transaction from one cost center to another cost center. In KB61, we will see like here, my amount is 4,000 now. And in total cost center 1, we have 5,000 rupees. Let's transfer some 1,000 rupees from this transaction to cost center 2. Okay, so now the entire cost center 1, the assigned value is 5,000 with 2 transactions. From this document number, we will do some amount transfer to cost center 2. So with KB61, KB61, well, the document number was 1005. Okay, so system will ask for the document number 1005 RT01 2023. From this cost element, okay, we will transfer some amount from one cost center to another cost center. Simply execute. Now you can see the total amount available is 4,000. If we not make any change, the amount will be reposted to cost center 1 itself back. Here we can specify, let's say 1,000 rupees. We have to transfer to cost center 2. So the remaining amount will be coming back to cost center 1 itself. Enter, say, you can say. So like this way, you can specify which are the cost centers the value have to be transferred to. Yeah, system will remove the total amount of 4,000 from the cost center assignment and repost to the cost centers where we mentioned here. So here you can see, after removing the 4,000, cost center 2 will be posted with 1,000, cost center 1 will be posted with 3,000. So how the reposting have to be done? We have to enter the value and the new cost centers here. Yeah, and we can post it. Poster. Okay, it's a different type of controlling document. Yeah, see here, once we made the number ranges for controlling documents with KA and K, then we have simply copied the standard one, but here you can see how the transactions will be segregated. COIN was the first element that we use for the transactions from FI directly, COIN. Okay, now it was with controlling line item, reposting the controlling line item, that is RKU3, a different item. How the FI documents have been segregated with document type like KR, KZ, KG like that, or DR, okay, SA something. So here the controlling objects or controlling line items will be segregated with these elements. Say here, this RKU3, because it's a reposting of controlling line item. If we have not specified this RKU3 under any number range, then system will not perform this. Yeah. Anyway, so this is how the controlling number range will be used in the backend. Now we have transferred some value from one cost center to another cost center. It was like this before. So 5,000 with cost center 1 and 3,000 with cost center 2. Now we have transferred 1,000 rupees from 1 to 2. So 1:3, 1,000 and 3,000 have been like the system has segregated, or divided into 1,000 and 3,000, and 1,000 posted to 2 and 3,000 back to 1. Let's see if you refresh the report. Now you can see that system has removed the amount, see 3,000 and 1,000, and posted back 1,000 to the cost center 1, and sorry, 3,000 to cost center 1 and 1,000 to cost center 2. So now it became 4,000, 4,000. So out of the total value, the amount have been divided and reposted to a second cost center. From a particular controlling line item, out of the total amount, the amount have been reposted. This reposting in controlling line item. Okay, so another type of cost center reposting we have, that is repost cost. Reposting of cost. Yeah, so with KB11N, we can transfer the value from one cost center to another cost center, regardless of like how we got that amount. Say for example, here it is 4,000. Okay, so 1,000 we know, like it has been here from the transfer from 1,001, and the 3,000 is from the direct transaction. See, if you double click on here, you can see. Yeah, first we will see 3,000. It's from a transaction. This is the transaction. See a FI transaction, and here we know it's by transfer or reposting. See, so this is the reason why system got this 1,000 rupees in cost center 2 by the reposting of line item. Anyway, so regardless of like the source of amount came to a particular cost center, the amount can be reposted to another cost center. See, out of this total 4,000 from cost center 2, we can repost maybe 3,500 to cost center 3. Yeah, so out of the total amount, we can repost to another cost center. That is repost cost. System will not consider any line items and all. Yeah. So reposting of cost, let's say reposting of cost. So controlling area, date, cost under old, cost under 2. With cost element, I think it's 400000. Yes. Amount to do reposting. Okay, that is 2500. Again, now to new cost center. Let's go for cost center 3. Okay, so 3500 will be reposted from cost center 2 to cost center 3 with the expense salary. Yeah, reassignment of value from one cost center to another cost center. Simply we have to specify from where to where the amount have to be transferred, and we can post it. Document is posted. Now it was like this before, 1 and 2, 4000, 4000. We take the report again. I can see 3500 have been credited from here, and it's been posted to 3. Reposting of cost. So these are 2 type of reposting with a cost center value, one with line item, another with total cost. Okay, the 2 type of reposting. So cost centers, cost center planning, and cost center reposting. Now we will see the assessment. Here we can see the the uses for the secondary cost element as well. Okay, let's go for the assessment of a value. We'll say assessment cycle. We are going to assess the value or particular value, yeah, with other cost centers. Let's take the same scenario. Okay, let's consider the total value posted by cost center 1 for electricity expense. We will make an assessment. How much can be the share for cost center 1 and 2 if there is a rule like this? Okay, so based on a fixed rule by percentage, we will assess the value with a particular combination. The combination is electricity expense and cost center. Out of this combination, okay, so we will make the assessment with this ratio or with this what I can say share percentage or a rule, assessment rule. Yeah, so this is what we are going to do with an assessment cycle. So here first we have to create a secondary cost element and a primary cost element. So primary cost element we already have. Okay, so first we need a primary cost. So primary cost have to be created as electricity expense, FS 00. Electricity expense we have. Now the secondary cost. Secondary cost element. So secondary cost element we'll create with FS00 itself. Yeah, we'll create an assessment cost element for electricity expense. Okay. So now how we can make a secondary cost element. The primary cost we have made directly by specifying cost element category 1, and our type was primary cost driven. Now coming to the secondary cost. So secondary cost, maybe even we can make a separate group. So although one series we used for liability, 2 series we made for assets, and revenues we have used for 3 series, and 4 series we use for expense. So now we go for a 5 series for all the secondary cost. Okay, so how we can create as like GL group? We have to create a new GL group, secondary cost. How we can make it? A new GL group. We code for GL group. Yeah. Chart of account was RTC. And the cost element, we go for all the 5 series. Now with FS00, 5 series number, RT01, we'll use secondary cost. Okay, so primary cost of revenue we had gone through. Now this is with secondary cost with account group secondary cost or new account group. Okay, we go for assessment for electricity expense. Coming to the control data, we have another set of cost element category all the way for secondary cost, not like 1 or 11. So here we have to make this account as an assessment cost element. So assessment. So assessment cost element is a type of secondary cost element. So this category 42 makes this account an assessment cost element. So here, let's go for a field status group also. Save it. This is assessment cost element. Or the secondary cost element. Yeah. Now we have to create one cycle, assessment cycle. So the entire data, yeah, like what to be assessed and where to be assessed and how to be assessed, which are the receivers, or what is the percentage ratio. So everything we will make in a cycle. Okay, so we'll create an assessment cycle. Yeah, KSU1 cycle we will create. So in this cycle, we can have multiple segments. Then what is a segment? See, actually we are going to do the assessment of electricity expense with this ratio and all. Basically, this is one segment. That will be segment 1. Similarly, we can have another segment. Let it be that we'll go for segment 2. There, let's make the expense, maybe rent expense, we will assess. Okay, again posted by maybe cost center 2. Yeah, so the receivers be here cost center 250%. Yeah, and cost center 3 50%. This is another assessment. Okay, so let it be segment 2. Yeah, so here, like this way, we can have multiple segments. By this segment, system will assess the electricity expense by cost center 1 to all these rules. Here, rent expense by cost center 2 to like with another rule. Now, these are all segregated by segments. So the entire segments we can see will be added in one cycle. Okay, so in one cycle, maybe not T01, in one cycle, we can have multiple segments. Every segment will be having who, like what are the senders, what are the receivers, and the rule, everything will be there. It can be different. For example, segment 2, it can be different. The rule can be different. So whatever it is, we have to create one cycle. Under one cycle, we can have multiple segments. So each segment will say what to be assessed and how it should be. Now, in case U1, yeah, so we'll create a cycle. Let's go for cycle RT assessment cycle 1. Yeah, date be from 1st of April 23. Yeah, RT01 assessment cycle. Okay, so out of this, we can assign the attachments. Sorry, the segments. We can attach the segments. So multiple segments we can attach here. So here, yeah. So we have the cycle, this one. Out of that, multiple segments, attach segment. As segment 1 will go for electricity expense. Here, we'll make posted amounts. The receiver tracing factor, we will make it as fixed percentage. Yeah, so here you have to specify the assessment cost element. So once we make the assessment, what will be the receiver cost element? Yeah, so assessment cost element is 50000. 50000 will be the receiver with the fixed percentage. Then which is a sender and which are the receivers. Senders and receiver, where sender is cost center 1, cost center 1. The sender cost element is this electricity expense, that is for 00002. Then receivers, yeah, let's go for cost center 1 to 3, cost center 1 to cost center 3. See here also you can see if it's a randomly selected cost center, okay, so we don't have the multiple selection. In that case, we can make a group and we can assign the group. So the amount can be assessed only through that group. I mean, cost centers in the group. Okay, so now come to the receiver tracing factor. The amount from cost center 1 can be assessed through cost center 1, 2, and 3 with the percentage or portion we specify here. That is 45, 25, and 30. So 45, 25, and 30. We can save it. So like this way, we can attach multiple segments. Segment 1 means the electricity expense will be assessed with this rule. So we can go for more segments so that more data can be assessed. So assessment cycle. Yeah. Now we have to run the assessment cycle, because if you go for the reports, electricity expense and cost center 1 or cost center in total, so this is the actual report. This is the actual report. For the assess the report, we have to take the assessment cost element report. Primary cost report will be the actual report. See here, it's a primary cost element. This is the actual report. For assess the report, we have to take the assessment cost element report. Our assessment cost element is 50000. We go for 500000. That assessment cost element. Yeah, we can generate the report, but here we have not made any assessment. We have to run the assessment, then only system will get that value. Okay, so assessment run, we will make with KSU5. Yeah, so if we go for KSU5, KSU5. So here, the time period for the assessment, then which cycle we have to run. So this under the cycle, we can have multiple segments. So all the segments will be executed. So as one segment, we have given all the values. Now we have the posting with primary cost, electricity expense with cost center 1. Okay. Now let's see. Okay, cost center 1 only we have the value, right? Otherwise, you have to go for a transaction with cost center 1 and electricity expense. Otherwise, the system will evaluate only the amount with cost center 1 and electricity expense, even though we have some electricity expense value. And if it is with a different cost center, system will not validate that. Okay, so this is the actual. Coming to the execution, we can execute. So the processing have been completed without any error. So there is one sender and 3 receivers. No error. There's a test run. You can go back, remove the test, and execute. Now it has been executed with an update run. Let's check the report. Again, with the actual or the primary cost element, we can generate the primary cost report, actual report. At the same time, if we go for the report with assessment cost element, yeah, we can see the assessed report. See, out of 2500, these are the assessed values. Yeah, because the cost center 1 already have that 2500. Out of that, 1125 have been removed, okay, and it has been posted to cost center 2 with 625 and cost center 3 750. This is the assessment system has made. Yeah, so out of the total value, like 55% have been shared to cost center 2 and 3 with this ratio. The remaining amount would be there with cost center 1. Say now cost center 2 and 3, you can see what is the value out of the total value available or posted with cost center 1 and collects the expense. So now 625 and 750 is the share for cost center 2 and 3 out of the total amount available or posted with cost center 1 with the electricity expense. This is the assessment. Again, the actual value will be still with the posted with cost center, cost element electricity expense. That will remain the same. Actual value. So actual value and assessed value. So this is a use of secondary cost element. Okay. So coming to the controlling, these are the points that we will be discussing. Cost element, cost center, profit centers, and internal orders. For the configuration, we have configured a controlling area assigned with a company code, and cost centers also have activated functionality. The number range we have given, even the version have activated for planning, and the leading ledger group 0 will also have activated with the controlling version. So with cost element accounting, we have primary cost and secondary cost. Yeah, with any direct cost, like we go for the transactions or the cost allocations, we have created as primary cost. Yeah, but the category 1, we made the account as a cost, and 11 we made as a revenue. Both the cases we use for the allocations. Secondary cost, now we have seen one usage. Okay, so for the assessment of a value which is already been posted to a primary cost, we use the secondary cost now. So similarly, we have different type of uses with secondary cost element. It can be settlement, or it can be overhead costing, or some internal allocations. So different type of secondary cost we can use for different purposes. The cost center accounting, like we have seen how we can create or copy, even do the changes, and even in display mode. Group we have created with multiple cost centers, and also we have seen, like, wherever, which are the areas that we can use that group for. For some areas with the assignments, or some areas with the report generations, yeah, we use the cost center grouping. Some hierarchies we can create beyond the standard hierarchy, the standard key. Yeah, some sub-level hierarchies. Yeah, we can use to segregate our cost centers. Yeah, so some one example I have showed you with the real scenario how it will be. Okay, and cost center report also we have seen. Then with the cost center planning, with the combination of a cost center and cost element, we made a planning for a particular time period, and with the actual value we have seen the variance. So with the set of or a combination of the set of cost centers and cost elements with multiple combinations, we can specify the value, we can plan the value, and with the actual amount posted to that combination, we have seen the variance as well. Anyway, as per version 0, that is actual version, we have made the planning, and planning version 0 we have already activated long back. Now we've done the planning, and report also got generated. Okay, so after that it was with reposting of cost center values, one with controlling line item. From a particular transaction from one cost center to another cost center, we have seen how we can transfer or repost the value. And after that, it was reposting of cost. Okay, so in controlling line item, with that maximum value, we could transfer from another one to another cost center. And in reposting of cost, regardless of the what you can say, the transactions and all, out of the value, like we can transfer from one to another cost center, reposting of cost. Then it was with assessment cycle. Here we have discussed about the how a secondary cost element will be working. Okay, so for the assessment of a particular value with a particular combination, yeah, the assessment have been made with the assessment cost element. The assessment cost element is a type of secondary cost element with the category 42. Cost element category 42 makes this account as an assessment cost element. So we specify the assessment cost element as the receiver for the assessed value for this combination. Yeah, the value posted by electricity expense and cost center 1, from that combination, we have given an assessment rule for making the assessment of that value. Then as a segment, we have made the cycle. Okay, and out of the value like available with electricity expense and cost center, the center combination, by making this assessment run, we have seen how the values have been received. So cost centers, the receiver cost centers have received the value based on the the ratio or the receiver factor, the percentage or the fixed percentage, like the value have been there posted with the assessment cost element. So action will be always with primary cost, and the assessment with the assessment cost element. Assess the value with assessment cost element. That is assessment cycle. Yeah. So these are the points like we had gone through today. So any more question from the cost centers and cost elements? Any question? Nehal, Priyanka, Jeswa?
No, sir.
No.
All right. Okay, so remaining topics we can see tomorrow morning. Yeah.
Thank you, sir.
Yeah.
Okay, sir. Thank you.
Bye.